Hello, my friends, and welcome back to episode number 50 on In Her Wallet podcast, a weekly show helping women around the world take control of their finances for good and build better financial futures one episode at a time. My name is Sofiia. I am the host of In Her Wallet podcast, creator behind it, and an accredited investment representative here in Canada. Today, we are talking about financial education industry and how it has been altered in the last couple of years. Primarily, I want to talk about the rise of financial influencers on social media. For young people, and here I probably mean everyone under the age of 40 or 35, TikTok and Instagram are the places that they primarily go to for financial consultancy and advice. Many have been burned from getting recommendations on investing in particular stock that lost value to depositing money on platforms such as FTX that went bankrupt and unfortunately meant that these people lost their life savings. So how can you tell if you're getting bad money advice from social media and these finfluencers? And how can you protect your money and wealth building journey? These are the questions I will answer in today's episode. Before we get into it, if you guys do feel like In Her Wallet podcast brings you value in any way, I would so appreciate if you took the time to leave us a 5-star rating and a review. All you need to do is open the Apple Podcasts app, scroll all the way down to the leave the review section. If you feel like I've earned it, please leave me a 5-star rating. And in the review section, you can tell me anything you want me to know. Honestly, it can be short or long, but anything from the topic suggestions to the guests you want to see will help me understand how you guys are resonating with the content we are creating and also will help me show up as a better host for you. All right, with that, let's dive into our conversation. To start off, let me lay the ground for who finfluencers, so-called financial influencers, are. Simply put, a finfluencer, as financial influencers are usually called, is one who gives an ordinary investor information and advice on an array of financial topics, from things like market and trading to personal finance and crypto to how to use credit cards and so on. Their social media of choice to communicate with you guys is oftentimes YouTube, TikTok, Instagram, where they post short and long form videos. Naturally, first-time investors and those who are in the beginning of their journey are drawn to such financial influencers, and that really explains why their most watched videos and content is usually around topics like how to buy your first stock, how to gain a 12% return in a year in a stock market, get regular income from dividends, how to do it, and so on. Interesting to note that traditional news channels such as CNBC, Yahoo Finance, Morningstar normally cover topics such as market updates and market overviews by professionals who know how to do that. But new investors need education, and that really is the vacuum of financial literacy that financial influencers are trying to fill in. And in these past 2 to 3 years, we've seen a real explosion in the amount of financial influencers out there, primarily because the stock market is being flooded with new investors post-pandemic. And that is happening thanks to democratization of investing. There are a lot of easy-to-use apps these days, such as Wealthsimple, that are making investing more accessible for everyday user. So far, what I have covered seems somewhat normal. There is a gap in the market that traditional news outlets are not covering, that financial literacy and educational aspect, and financial influencers are filling that gap with information that there is a demand for. The trick is that the people who are doing it, these financial influencers, have one common trait they all share. It's the fact that majority of them do not have formal financial education and training to be giving us advice and recommendations in the first place. And that is one of the main reasons why I believe this topic is not talked about enough. We are all growing accustomed to receiving advice about money from people who are not meant to be giving us such recommendations again in the first place because they lack financial formal training, and also oftentimes they have underlying motive to recommend us stocks or certain financial products without fully disclosing risks associated with it because they're getting paid for it. I'd like to illustrate my point with a real life example so you can see for yourself how this financial miscommunication happens in real life. And because I've referred to FTX, the cryptocurrency platform that was founded in 2019 by Sam Bankman-Fried and saw full rise and dominance of the crypto market before it came crashing in November of 2022, I will use that as my example today. I will walk you through the FTX story with an assumption that you have no knowledge or some basic understanding of how cryptocurrency works and what happened with FTX. So stick with me. As you probably know, cryptocurrency has become popular for investments and sending payments to other people and merchants. Cryptocurrency coins quickly increased in value over the pandemic. That was the peak of it when a lot of people got interested in it. And one such example is the Shiba Inu coin that saw a 45 million increase in value in 2021. So, how can you get your hands on these coins and cryptocurrency, even if you have positive and good motives to just invest and diversify your investment portfolio? One way to get cryptocurrency is to open an account on a digital trading platform, which lets people buy one coin and trade it for another. Through these trading platforms, people can also buy cryptocurrency and then hold it and later convert it into cash or fiat currency. Until late 2022, FTX was one such trading platform. It was founded by Sam Bankman-Fried in 2019, as I mentioned. Customers began opening accounts on FTX to trade and buy cryptocurrency, and top venture capital investors obviously started pouring money in. FTX was praised by everyone, and you could see advertising of this platform from places like Super Bowl to just celebrities really pushing it on social media. Some of the names of people who praised FTX were celebrities like Tom Brady, the tennis player Naomi Osaka, model Giselle Bunkin, and apologies if I'm pronouncing her last name wrong, Larry David, and even financial influencers like Graham Stephan, Andre Jig, Jasprit Singh, and many more. Majority of whom, again, share one trait in common. They do not have formal financial education or licensing to be giving financial advice in the first place. Due to the fact that the company became so popular in such a short period of time, by January of 2022, it was worth $32 billion. However, that came to an end just 11 months later in November of 2022 when a balance sheet of Sam Bankman-Fried's second company, Alameda Research, was leaked to the public. And what first appeared to be an accounting oversight turned out to be a major financial fraud. So when this whole situation started unraveling, people of course wanted to get their money back from FTX. Unfortunately, majority of them couldn't do it. And the reason for that was because FTX was putting customers' money not into their own accounts, but into the accounts of Alameda Research, which again was controlled by Sam Bankman-Fried. From the very start, this whole scenario was set with the sole purpose of financial fraud. After this revelation, FTX filed for bankruptcy. Sam Bankman-Fried is being sued for fraud and many other accusations. And the celebrities and financial influencers who were promoting FTX, some of them are also being sued, but others are simply apologizing because they did not realize the risks that were associated with the platform. Just imagine you're watching a YouTube channel, a beginner, investor, new person to cryptocurrency. This trustworthy financial influencer is recommending you to use FTX as the platform to deposit your money and really buy crypto or whatnot. And at the end of the day, you are left with nothing because all of this is fraud. Of course, the case of FTX is big and it's probably one of the greatest financial fraud examples the history has seen. But financial miscommunication can be seen left and right today. And there is really no way to distinguish good money advice from the bad one. After all, I think when we're talking about money, we always look for a person who can speak clearly and with confidence on a certain matter. And one thing financial influencers definitely have aced is that ability to gain trust from people through their confident speaking abilities. So today I want to share 3 practical ways how you can guys better distinguish bad money advice from the good one and really stay away from so-called financial influencers who do not have knowledge or expertise to be talking about money and personal finance. First and foremost, anyone who you listen to for financial education purposes or to receive investment advice should be properly, formally trained and educated and licensed in this space. Money managers, investment consultants, financial planners, all of these professions are regulated as investment advisors in Canada and in the US, which means these people have received formal training and licenses and are strictly regulated by the government law when it comes to money advice. That is one of the main reasons why I always state in the beginning of every episode that I am licensed in this space. That way, you guys know that any content you receive from In Her Wallet podcast and in general from any In Her Wallet media outlet is trustworthy and is credible. And that's something I really want you to look out for next time you're listening to anyone else that is money related. So again, formal financial education, licensing in training, that's the first red flag that you can recognize. If that person doesn't possess, probably that's not a good place to receive money recommendations. Second thing I want to share with you is I'd say look for transparency. How is this financial influencer making money? Are they being endorsed by companies for recommending certain stocks or products to you? If so, that's a conflict of interest right there because they might not be fully disclosing risks involved or simply don't care enough to understand the ins and outs of a particular product or stock before recommending it to you as they're being paid for it. And finally, my recommendation to you is to steer away from anyone who gives you a sense of urgency with regards to investing. Personal finance is and should be personal. Investing is and should be more of a marathon than a sprint. I always say that investing is a long term game, and successful long term investors are well prepared, resilient, disciplined, and focused so they can achieve their success and complete their long term race. And before you embark on any 20-year investing journey, you really must carefully understand and evaluate the investment risks involved, what are your goals and objectives, the liquidity needs, and so on, so you can choose the most suitable asset allocation for your portfolio. Let's go over this again. Make sure that anyone who you receive financial education from is properly licensed and trained. Make sure to keep an eye out for transparency. Check whether that person is being paid for the recommendations that they are giving to you. And finally, steer away from anyone who gives you a sense of urgency when it comes to investing. Well, that was it. I hope you guys enjoyed the 50th episode of In Her Wallet podcast. Time flies, and soon we'll be celebrating our first birthday of the podcast. If you guys gain any value from this show and this episode, I will so appreciate if you leave us a 5-star review and a rating. Again, you can either do that on the Spotify app or on the Apple Podcasts app. The review can be short or long. Honestly, I don't care, but I love to see what you guys think, what you resonate with, who you want to see as guests in the future episodes, as well as potential topics for discussion. It helps me show up as a better host for you. As always, I want you to give yourself credit for showing up for yourself and your future because every time you do that, you increase what's financially possible for you. I thank you all for being with us today, and I will see you next week.